Hello everyone, welcome to my channel. Today, let's predict Nvidia stock. I am a swing investor, and I will not consider the price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 to 3 weeks. Welcome to subscribe to this channel. Nvidia stock has fluctuated slightly in the past 2 days, and the trading volume has not increased significantly, but it is still higher than the average daily trading volume of the 5 trading days a week ago, which indicates that the stock is currently facing correction pressure. Because the stock accumulated a large number of profitable positions in the low area in April and early May, affected by profit-taking, some investors seem to have exited the market in order to avoid the risk of stock price correction, but the accumulated outflow of funds is limited. The stock fell 3.5% in pre-market trading on Monday, mainly due to the market panic caused by Moody's downgrade of the U.S. sovereign debt rating last Friday. So how much impact will this news have on the stock market? We will discuss it later. Let's first analyze the current situation of the stock technically. Through the 30-minute chart of the stock, we can see that the stock price was in a consolidation cycle from May 1st to 9th, and a large amount of long capital should have accumulated here, and then the stock price entered the pull-up stage. It is worth noting that on May 13th, as the stock price continued to rise and the trading volume increased significantly, there should be long capital involved here, so $124.40 became a key support position. The trading volume of the stock has decreased in the past 3 days compared with May 13th, but the capital selling signal is still very obvious. The proportion of funds flowing out of the market here should be much higher than the inflow of funds. But now the question is how much room for the stock to fall back. Yes, $124.40 is a key reference position, but even if the stock price falls to this price, the bulls will block the bears in the $115.10 to $124.40 area. Through the position distribution of the stock, we can see that the stock currently has a large number of positions distributed below $124.40, which means that the long capital that entered the market at a low level before has not yet withdrawn from the market on a large scale. Over the past 3 trading days, the stock's position volume in the $131.40 to $136.40 area has increased significantly, and there should be collective selling from profit-taking and locked-in positions. So once the stock price pulls back and falls below $124.40, the stock will enter the support area, and bulls may intervene in the stock again and drive the stock price to rebound. But as mentioned earlier, there are still a lot of long positions in the low area, so this wave of selling may not cause the stock to fall too much. The current price of the stock has nearly 8% of room to fall from the $124.40 position, and the stock's selling wave may end in 2 trading days, so the possibility of falling below $124.40 does not seem to be great before there is no other additional major negative news. Moody said on Friday that it had downgraded the U.S. rating by 1 level from AAA to AA1, a move that reflects the increase in U.S. government debt and interest payment rates over more than a decade, which is much higher than similarly rated sovereigns. Moodys is the last major credit rating company to cancel the U.S. AAA rating. S&P and Fitch removed the U.S.'s AAA rating in 2011 and 2023, respectively. Treasury Secretary Scott Bessent shrugged off the Moody's downgrade in an interview with NBC's Meet the Press on Sunday. Bessent believes Moody's is a lagging indicator. Indeed, does the downgrade of the U.S. sovereign debt rating at this time carry a political color? Moody's downgrade of the U.S. credit rating has led investors to sell bonds, and U.S. Treasury yield soared on Monday. Interest rates hit a key level that has been under pressure in financial markets recently. The 30-year U.S. Treasury yield jumped to more than 5%. On this issue, I think the market is a little over-panic. The U.S. economy is still strong, and if the U.S. falls into a recession, then other economies may be in worse shape. Capital is smart, and after a while, the yield on U.S. Treasury bonds is likely to fall, because the future volatility of the stock and gold markets may be higher. Don't forget that the U.S. trade negotiations with China are still unclear, and trade and other confrontations may still escalate in the future. In addition, a recent piece of positive news from Nvidia. Nvidia is opening up its AI server platform to chip competitors. Allowing customers to bring their own CPU or AI chip opens up the option of future racks with Nvidia and Qualcomm chips inside. Nvidia CEO Jensen Huang announced the move at Taiwan's Computex show on Monday. The new system is called NVLink Fusion. The first NVLink Fusion AI chip partners include MediaTek, Marvell, and AIchip. Fujitsu and Qualcomm are the first CPU partners. This open system means that large cloud service providers can now combine their custom chips with NVIDIA's highly sought-after technology. For NVIDIA, this means that its server platform has the potential to cover more data centers and bring in more revenue. This is the option data based on the distribution of strike prices for NVIDIA stock expiring on May 30th. We can see that call options have a higher proportion of trading volume. The strike price with the highest proportion of call options trading volume is $150, while the strike price with the highest proportion of put options trading volume is $130, which is not much lower than the current price. This set of data reflects that most investors believe that the stock may still rise further in the short term and hit the $150 level. Moody's downgrade of the U.S. debt rating has limited impact on the stock market. I don't think this may cause the stock to fall sharply, and the stock price is not expected to fall below the $124.40 level, but it seems that additional catalysts are needed for the stock price to rise further. I think the stock may enter a relatively long consolidation cycle next, with a price range of about $124.40 to $140. Unless there is major positive or negative news outside the market, the stock may not fluctuate much before the company releases its earnings report on May 28th. Okay, guys, this is my price forecast for Nvidia stock. Thank you for watching. If you agree with my analysis, please share and subscribe to my channel, and see you in the next video.